Hi everyone, Iggy here from the Investing Iguana. We're in for quite a discussion today about a major player in the global investment landscape. I know we all like success stories, but sometimes it's important to delve into cases where things didn't go quite as planned. So in today's video, we're going to be talking about Singapore's sovereign wealth fund, Temasek. They've made headlines recently for not the best reasons. They've just reported their worst returns in 7 years. It's a shocker considering their historical performance, so let's take a closer look and unpack what went wrong. Now, there are a number of factors that contributed to Temasek's poor performance, and we need to dissect this situation piece by piece to get a clear understanding of the events that led to this unprecedented outcome. At the forefront, we have the global economy in turmoil, facing a number of headwinds that certainly impacted Temasek's fortunes. Rising inflation, higher interest rates, geopolitical tensions, specifically the ongoing war in Ukraine, all of these created a ripple effect in the market and undoubtedly led to increased uncertainty and volatility. Such economic instability and geopolitical turbulence often cause investors to flee to safer assets, leading to lower returns on risky assets. This global economic uncertainty has made it more difficult for Temasek, just like any other investor, to generate returns on its investments. Now, let's move to the composition of Temasek's portfolio. It's heavily weighted towards technology stocks, which have been some of the hardest hit by the recent market sell-off. This strategic decision, which may have reaped immense benefits in the past, proved costly in this turbulent environment. Of critical importance is Temasek's significant exposure to Chinese tech stocks. As you may know, these stocks have been particularly volatile in recent months. Chinese regulators' crackdown on tech giants and changing regulations in China have caused massive fluctuations in stock prices, contributing to Temasek's less than desirable performance. Furthermore, Temasek also took a number of mark-to-market losses during the year. If you're not familiar with this term, mark-to-market losses occur when the value of an investment falls below its purchase price. In Temasek's case, these losses were driven by the decline in equity valuations across the board, a clear result of the market turbulence I just mentioned. So, with all of this information, what does it all mean for Temasek? Well, it's clear that the company is facing some significant challenges right now. But as we know, every cloud has a silver lining. It's worth remembering that Temasek is a long-term investor. Short-term market movements, while impactful, do not define their overall strategy. They remain confident that their portfolio will recover in the long run, given time and more stable conditions. Moreover, Temasek is already taking steps to mitigate its current situation. They are reducing their exposure to risk and focusing on investments that they believe have the potential to generate long-term returns. This could mean diversifying into other sectors or regions and potentially reassessing their investment strategy. This scenario with Temasek serves as a reminder to all investors out there that even the most sophisticated investors can experience losses in a volatile market. But it's also important to remember that Temasek's long-term investing ethos is the key in weathering this storm. They've weathered tough times before and they have the resources to bounce back again. So, that's a brief yet comprehensive overview of what happened with Temasek. It's been a learning journey for us, reflecting on the intricacies of global investment in turbulent times. I hope you found this video informative and it helped you to better understand some of the forces at play in the global economy and how they can impact even large, well-resourced investors like Temasek. If you have any questions or thoughts, please feel free to leave them in the comments below. And as always, thanks for watching and sticking with me until the end. Remember, every market condition brings its own set of lessons and opportunities. Peace out, iguanas. Keep investing and keep learning.